The numbers tell a story of two different markets at the close of 2025. For stocks, the year was a triumph. Major indexes posted significant gains that rewarded patient investors. The S&P 500 climbed by approximately 16%. The Nasdaq Composite surged by roughly 20%. Even the Dow Jones Industrial Average delivered a solid gain of about 13%. These figures represent a very strong performance for a single calendar year, driven by optimism around technology and artificial intelligence throughout most of the year. However, the final trading days of December painted a more subdued picture. From December 29th to 31st, the market's momentum began to falter. The S&P 500 fell around 0.3% on December 29th. This downward drift continued for a second day. Traders trimmed holdings in some of the year's biggest winners. The late-year weakness effectively ended hopes for a Santa Claus rally. With low holiday volume, even moderate selling had an outsized impact on prices. When the market reopened on January 2nd, the mood was cautious and mixed. It was not a decisive move in either direction. The Dow started the year with a modest gain of about 0.6%. The S&P edged higher by about 0.2%, helped by semiconductor strength. In contrast, the tech-heavy Nasdaq slipped just below the flatline. While the stock market celebrated a strong year, crypto ended 2025 cooler and more uncertain. Bitcoin traded in a range near key resistance levels, around $87,000 and around $90,000, down from an October peak near $126,000, leaving Bitcoin about 30% below its high. The drop spooked many retail traders and kept institutions cautious. The final month saw exceptionally low activity. Trading volume fell to a 15-month low. Low volume signals weak conviction from buyers and from sellers. Thin markets can amplify volatility. A single large trade can move price more easily. Analysts noted leverage in derivatives was sharply reduced. Following significant liquidation events, traders adopted a more cautious stance. Spot Bitcoin ETFs saw net outflows into year-end, suggesting profit-taking and risk reduction. Some funds, like those tied to XRP, saw modest inflows. Broad sentiment toward Bitcoin stayed tepid as some searched altcoins for targeted opportunities. The late 2025 divergence has clear drivers. For stocks, an AI-led narrative had investors paying premiums, boosting the Nasdaq. The year-end dip reflected low holiday liquidity and profit-taking, not a change in fundamentals. In crypto, reduced leverage and shifting ETF flows shaped price and sentiment. Macro fears after the October peak pushed traders out of risk. Liquidations flushed leverage, then activity stayed muted, a structural reset. Ongoing security exploits added a background risk unique to crypto. Net result: markets in transition, equities repositioning, crypto recalibrating. Watch for a return of volume, ETF flow direction, and mega-cap tech performance. Key points: strong 2025 for stocks. Late December weakness. Jan 2 mixed open. Crypto cooled with low volume. Main idea: markets enter 2026 at a crossroads. Supporting details: AI-led stock gains. Bitcoin sits, saw 30% off peak. ETF outflows signaled caution. Security exploits weighed on crypto. Conclusion: stay balanced and patient. Until fresh catalysts emerge, the market looks set to catch its breath.